Another great day comes to an end. Welcome back, guys and gals. Hope you guys had a fantastic Tuesday, but it's about that time of day again. Time to get back to work, ready for Wednesday's trading session. It is the first day of March 2022. And as always, my name is Joseph. Welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all ready in the background. As you can see, S&P's ready, Nasdaq's ready, oil is ready. Glad to see you are ready right along with us. Boy, where do I begin? Got a bunch to cover in tonight's video. Got some great trades setting up for tomorrow. Got some juicy ranges on the S&P and the Nasdaq. Got some real fun charts on the E-minis. And boy, that oil, what was it? Almost a $12 move today, and they may not be done tomorrow. So we got a lot to cover here as far as trades I'm watching for tomorrow. We got some big news right in the middle of the day tomorrow, so I want to make sure you know kind of how to avoid, how to stay out of trouble with that. In this video tonight, I'm going to cover all my favorite trades setting up for Wednesday's trading session. We'll also talk about some stuff to avoid to keep yourself out of trouble, keep yourself in the green, whether you're trading on your own or whether you're trading with us tomorrow in our trade room. And before we jump into the video tonight, as always, you better subscribe to our YouTube channel. I publish this video every evening with my best trade ideas on this channel, so make sure you subscribe. Hit that little bell icon because a lot of this stuff is pretty time sensitive, right? You don't want to watch it a week late, so hit that little bell icon so you get that notification when I upload something new. And also, too, speaking of questions, too, if you have any questions, drop those questions for me in the comments section. I would love to answer any questions about anything we talk about here in the video tonight, so don't be bashful asking questions. And if you enjoy the video as much as I enjoy making it, if you tune in every evening to get your mind right and get those charts right for the following day, hit that like button for me. You know the drill. Thank you so much for tuning in and supporting this YouTube channel. But enough of the intro, though. Let's get this thing going. Wednesday is not going to trade itself. How are we going to make our money on Hump Day, second day of March here? Well, I'll tell you, there's plenty of opportunities out there in these markets right now. I've got us range bound on the S&P, range bound on the Nasdaq. Got some really nice potential for a pendulum swing right back up again. Would love to find some buying opportunities here on the E-mini, S&P, and the Nasdaq. Obviously, if things continue to escalate in Ukraine, my heart really goes out to the situation in Ukraine right now. If things do continue to escalate, we may see some breakouts going lower. So we've got a couple issues down here. There's a couple really big levels of support down there. So we'll talk about kind of how to trade a breakout lower and what not to do as far as a breakout goes there. So we're going to cover the long side, the short side here on the S&P and the Nasdaq. And obviously here on oil, I mean, it's tough to do anything but want to buy this market right now. We talked about last night on the newsletter. Hopefully things would kind of settle in a little bit, but that is the opposite of what happened, right? Fighting intensified. It's, boy, some of the stuff you're seeing online right now coming out of Kiev and the bigger cities there is pretty remarkable. It's really affecting the whole world right now. So we definitely have a very sensational situation right now. We really have what I think is a pretty simple game plan for tomorrow. I've got probably 3 different scenarios I'm looking for on oil, and we'll talk about those 3 scenarios and how to know what they are and how to trade it, and also too what a reversal might look like. You know, you never know. You know, who knows? Maybe there's a ceasefire overnight. So we'll talk about how all the scenarios might play out if you're an oil trader like we are in our trade room. So charts are ready to go here. Before we jump into the charts and talk about individual setups, let's take a look at the schedule for tomorrow, because tomorrow it's not your average Wednesday. As I mentioned last night, we have quite a bit of major news in this first week of the month. Tomorrow, of course, the big news is going to be that testimony from Jerome Powell on Capitol Hill. He'll be testifying, I believe tomorrow is in front of the Oversight Committee or the Banking Committee. It doesn't really matter. As I mentioned last night on the newsletter, we've got these 2 back-to-back days on Wednesday and Thursday. The one on Thursday is usually a dud. By then, everybody's already heard his testimony. He's not surprising anybody. So we definitely, I would anticipate that to really throw almost a wrench, right, into the morning tomorrow morning. What oftentimes happens is when he takes the microphone, he's going to start reading a prepared speech, and the market will oftentimes either get really quiet or really pick up volatility. So it's usually one extreme or the other. It all kind of depends on what he's talking about. Now, obviously, with what's going on right now, he may kind of go off script a little bit, and that may shake things up. So this definitely is something I want to be watching tomorrow. But really, for the most part, whenever we have one of these, testimony days, they happen a few times every year. Really, what you want to focus on is make your money early or make your money later in the morning. Or in the afternoon, right? But trying to trade that, 10 o'clock to 10:30, obviously we'll have to wait and see what we get. But just be aware, the market may be paralyzed for a little bit around that 10 o'clock, 10:15, 10:20 to 10:30 area. Sometimes it lasts quite a bit here. So tomorrow morning in our trade room, I'll be focused on getting prepped up quickly, right? Finding those trades early. And usually we can. If we can't, though, stay patient after that testimony begins. Things will start to even out. They'll start to thaw out a little bit once we get through about 10:20 and 10:30. So not your typical news event for tomorrow. Now, talking about other scheduled news events, don't worry too much about that employment number. The OPEC meeting's not going to affect very much here right now. The Beige Book is definitely something I always look forward to. That is the notebook, right, from the last Fed meeting. And since everybody's so obsessed with inflation, obsessed with the Fed, you have to think that 2 o'clock Beige Book may be a nice little afternoon delight as we go into the closing bell, that 2 o'clock to 3:30, 4 o'clock, tomorrow afternoon. So definitely don't skip out on the afternoon tomorrow. Get some Beige Book action coming in. And since inflation is such a big thing right now, you would imagine people will be listening in on it. Now, if you want some entertainment tonight, if you get the popcorn out, right, you get the State of the Union address is tonight. I don't think that will affect these markets too much. The State of the Union, of course, is a chance for the president to brag about all their accomplishments. So that should be relatively entertaining, to say the least, here tonight. So I'll definitely be tuning in on that. Make sure you set your TiVo for that. I don't think that's going to affect these markets too much, but that's definitely something that we have coming out. But we'll come back, of course, tomorrow night. We get some more big news coming on Thursday, where we get some more ISM numbers on Thursday. So definitely make sure you stick with me here this week. We'll keep you posted on the biggest news here for tomorrow. And of course, let's not forget, we've got that cloud hanging over our head right now of what's going to happen in Ukraine. Last time we talked about, hopefully things will settle in and start to stabilize, but that's not what happened. And so at this point, as of right now, almost 6 o'clock Eastern time on Tuesday evening, it looks like things are just getting worse. And so that definitely is something that we'll be watching closely, and we'll be watching to see how it affects the markets here for tomorrow. As I mentioned earlier, my heart really goes out to anyone being affected by this. What a tragic situation. I'll leave my 2 cents out of it right now. I'm sure everyone's kind of in shock this whole thing is happening right now. But the bottom line is I will be monitoring that pretty closely. And, if things start to balance out, I would imagine markets start to balance out. But if things keep going, these markets are going to keep going. The E-minis will probably keep going lower. The oil will probably keep going higher. When I was a new trader many, many years ago, oil was right around $1.20. So it's been a while since we've seen that. So we'll see how things develop here overnight. All right, speculation's over. Let's grab a look at the charts here. S&P, Nasdaq, crude oil. Let's get after it here. What's going on right now on the E-mini? Over on the E-mini, what's the most important factor right now? The bears have control. You can definitely see we have a relatively strong move off of that high. We talked about this last night, right? We talked about how we had that strong move up. We're expecting to see a retest and then a rotation back down again. So if you watched last night's video, this should all make a lot of sense on what happened today. The amount we went above the range is spooky, right? Spooky how well those pendulum swings work. And so we definitely can see the bears have all of the momentum right now. But that is where the bear. Well, I shouldn't say that is where the Bears. That's all the Bears have, because again, the Bears have the situation in Ukraine right now, which if it keeps escalating, it'll probably keep on dragging these things down along with it. But it's not difficult to see, though, that we're pretty much, and you'll see more of the Nasdaq. We're pretty much right at some major support levels in what is ultimately just a bullish run into a trading range. You could also say too, if you want to look a little bigger here, you could also say too, this whole area really is just a bull market into a range. And so we're pretty much sitting right here at the low of that range. And if you've learned anything about trading on this newsletter, you know that in a bullish environment, we know buying underneath that trading range is the way to go. So the Bears definitely have control of the momentum right now, but again, it's not easy to want to be a seller until we can see a breakout, right? Until we can see some strength going lower here. So I've got the range above me, right? That range is kind of the big magnet here right now. And then what we're hoping for is the buyers, of course. The buyers have a couple options here right now. The buyers can buy it as we're going higher. We'll talk about how to get long as the market's going higher, right? So buyers can buy it as we're going higher. Target would be back up right to those highs here. Buyers can also look to buy it off the low. I would imagine too they can also buy it off that low as well. I would imagine there are again a lot of support levels down there, some pretty substantial support levels down there. So even if we go lower, the buyers can definitely look for some setups here. The sellers have to be patient right now, not forever. You could definitely assume that, just like we talked about shorting off the high last night, you would assume that if we can make it back to these highs, you would think the sellers could look for shorts coming off that high. That obviously is a ways away right now. What is more short term for the Bears would be if we can see a strong breakdown. Okay, and we'll talk about kind of what that might look like here in a moment. Really, anything besides a very strong breakdown, you've got to think has the potential to bounce, going literally right back up into that trading range. So buyers have a lot more options right now, but that doesn't mean we can't, find some sell setups as we go into, tomorrow's trading session. So how do we buy it? How do we sell it? Let's talk about as the market goes higher, because it looks like that's what these buyers want to do right now. They've taken the pendulum swing out. We saw a really strong move down. They retested. At this point, how do I buy up here? How do I sell up here? How can I play this? What you kind of want to think about here is you want to think about, actually, it's kind of the same pattern we see right here. Market spikes up, starts to grind higher, and we get those traps. Right? These are pretty common when you've got like a short squeeze of some sorts. So here's kind of what I'll be looking for here. Here are two scenarios to get long as we start going higher, because I can't really buy it yet. You can't really buy it yet. We're not quite there yet. We're still a very bear market right now. You get long right now, it's kind of a gamble. So a couple things. One would be, I would love, because you can probably think, right, there'll be a trend line right there. You get that pendulum swing up there. So if I can get up and get bears trying once, get bears trying twice, I think that's a great trap for a move going higher. Right? I think that's a great trap going higher. And what I'll do in that situation is try to find a channel off those highs and off that low. It's not required, but that would really help a lot with a trap entry off of that low. Now, we might not get that nice one, right? The bears try once, the bears try twice on this. Remember, it's bearish, right? Pendulum swing. Let those bears try a couple times. Once they're committed, now we look for that nice juicy signal. We can buy into those stop losses for that rotation back up to that high. Or let's say we pop and we start to grind, right? We call these the pop and grind, right? Or the spike and grind. In that situation, we're not getting that trap, right? So now what we do is we draw the trend line nice and steep off that high. We find that channel and we just simply wait for the pullback. Now, my favorite way to do this is to get underneath a prior swing, and that will almost always give us either a trap into a failure, into a pullback combination, right? Trap, seller failure off the moving average, pullback combination. Now, I know a lot of you guys have taken the free trading course, so you guys know what those patterns look like. They really look like. I'm simply drawing on the screen right now, right? You know the rules to it, so just look for those setups tomorrow. If you haven't taken the free trading course, if you haven't learned the entry setups yet, I cover all those setups along with all the rules, where to find them, where to skip them. I cover all that in a free trading course on our website. I'll put a little link up here for you in the upper right-hand corner. If you haven't, I know a lot of you guys have grabbed that free course. I've had a lot of great feedback this week from you guys making money with it, so congratulations on it. If you are one of the few that haven't taken it yet, though, definitely grab that link up there, get registered, learn the roadmap, and you'll be off to the races using this stuff on your own, or you'll be ready to go with us in the trade room as a new member. So grab that link that popped up there in the upper right-hand corner. That would be the way to be buying this. What we don't want to do is looking to buy it as it goes. I'm not looking to buy it into this high, right? I want to get into it before we go back up to retest that high here. Now, what if we get that run higher, right, and we take out that high? How would I sell off this high? I would sell off this high by looking for one of two scenarios. One would be a retest of the high, which is very, very common in a very strong move like this. A retest of the high followed by the two-try failure. One try for the bulls, two try for the bulls. Think about where their stops are and short right into those stops, right? One of my favorite trades in a range market. And I'm going to talk about that as we go lower here in a second. We end up going higher, right? We pull back. The buyers come in, all that momentum. They retest the high. Then we see buyers once, buyers twice. Now, there's a lot of variations of this pattern setup. So make sure you watch the rest of this video because I'll talk about more variations of this stuff as I go deeper into this video. I try to pepper the entire video with lots of little lessons that a new trader can really use. So if you're watching for the first time, make sure you stay with me for the whole entire time. Think about where those stops are. Okay, that's where you're looking for that short. So buyers try a couple times. They're right into those highs up here, right? We now think about where their exits are, and we can sell into those exits. Now, your job ain't done yet at this point. Okay, so we get the short off the high, two-try failure. Now, find a new channel and repeat after me. Trade the turn. Trade the turn. Now we go out. We find those traps, those failures, those pullback combos. Again, you'll learn all the nitty-gritty details of that inside that free trading class. We short it off the high of that trading range. All right? Now, let's say we go all the way up, but the buyers keep it going, right? They go all the way up, but now the buyers hold it and they blast right through that high. Okay, that's called a breakout. We'll talk about some breakouts. We'll cover those in the NASDAQ. All right, we'll talk about what a breakout would look like on the NASDAQ. So make sure you stay tuned for more on that. We get a lot open space up there, so if things start to turn good in Ukraine, you would think that might be possible for tomorrow. Now, if we go lower, right, as we go lower, what's the problem with being a buyer down here? Momentum. It's a great location for it, but the problem is momentum. So in these situations, this is exactly where you want to execute this game plan. Use the two-try failure, 1, 2. And again, there's a lot of variations of this. I'll cover some variations later on in the video. Okay? We wait for those bears to try a couple times because, again, it's bearish, right? We're not a bull market right now. We're at support, but we're not a bull market at this point. We think about where all the pain comes in for those sellers, right? And we buy into those stop losses. Then, as we're going higher here now, remember how the pendulum swing works. The amount we go below this range will be the amount we go above this range. So that's the short-term target. Now what you want to do is find that new channel off that high, mark up that low. Again, I like to get underneath a prior swing. That's where some of the best entries with traps are, with failure patterns, right, and pullbacks from there. So again, a two-try failure pattern off that low into trade the turn, find that new channel, and grab it right off that low with any of the entry patterns that we see, that we talk about in that trading course on the website. All right, guys? So that's the way you want to buy it off of that low. Now, like I mentioned before, and we talked about this last night, actually, on the video last night, there's a lot of support down here, right? You've got that, this whole area right here is a prior low, right? Big, that was the gap down low from Monday morning, yesterday morning. So even if we do end up pushing lower here, that's still game plan. The 1, the 2, right? The backup and that new channel trade in the turn, right? That's still in play. Okay, obviously we'll have to wait, a little bit longer to get it, but that's still in play here. Now, what's a breakout look like coming down here? There's a couple different breakouts. Okay, one of them, and again, we'll cover some more variations later in this video. One would be a move into those lows. We hold the pullback now, and we jump off that moving average. At this point now, we have to assume these buyers are looking for that next big leg down. Sorry, sellers, excuse me. Which is not completely out of the picture tomorrow. Again, with the violence right now in Ukraine, this could easily snowball. And so we could easily find ourselves down around that 4,100 big round number by the end of the morning tomorrow. Again, the key is going to be, though, we've got to get a move lower, take out some of these lows, and the sellers have to show us they mean it by holding that breakdown, right? If they don't, we're going to keep looking for those bears to fail, buy into those stops, and then again, trade that turn going back up to the pendulum swing on the other side. If they can hold that pullback, the same thing for the NASDAQ, if they can hold that pullback with that 1, 2, 3 breakout pattern, now we know it's on, right? Now we know what's going on. That key support level now hasn't broken down. We're going to mark up that low. We're going to mark up that high. We're going to drill down to our faster time frame. This is a monster 10,000 tick chart because the volume has been so incredible over the past 24 hours here. So I tend to use a slower time frame on my overall analysis to make it easier just to get my arms around the whole thing, right? So we're not trading off a 10,000 tick chart tomorrow. We'll trade off our faster time frames in the trade room, but that's where we're looking for those entry setups that you guys learn in that free trading course. Now, where would a good target be on this? Easy. The first leg and the third leg are oftentimes very symmetrical, okay? And you'll see that in the NASDAQ here in a moment, right? So if we break down and get that 1, 2, 3 breakout, right? 1, 2, 3 breakdown, I look at the size of that first leg, okay? Not the second leg, okay? First leg, and then that's going to help me really fine-tune where that next objective is, all right? And we'll do that together tomorrow, obviously, in our trade room. All right, guys? So remember, there's a couple more breakouts, though, I want to keep on my radar. Let's go to the NASDAQ here now. Got a pretty good idea of how I want to trade this thing tomorrow. So do you. Let's go to the NASDAQ here, and let's talk more variation. Because the NASDAQ is pretty similar, right? NASDAQ's pretty similar. In kind of a bigger picture look, you can see we're, in kind of a medium picture, I would say, right? Bull market into a trading range. We want to buy at support levels below the range, right? Trend line, pendulum swing, and even more so, you can see we had a range right here. Whenever you see a break out of a range, that breakout leg is the measuring leg, and so we can see they get a measured move there as well. So we're at some pretty hefty support here right now underneath this trading range. And of course, ranges act like magnets, right? So we go down, the bears fail, we go up, the buyers fail, we go down, the bears should fail here now. Again, assuming nothing changes here in the geopolitics here in Ukraine. Now, go bigger, right? Go bigger. It's the same thing. It is the same thing. In fact, you could probably even say on the bigger picture of the NASDAQ right now, you could say we're even at another support trend line, right? At the low of that channel. So not a lot different there, right? We got a big bull run there, big bull run there. I would imagine buyers will love, again, assuming nothing changes here. There's a lot of things, everything's kind of liquid right now. Everything's fluid, as the kids say these days, right? It's, again, we're kind of playing it by ear here as far as the, any updates out of Ukraine. But, all things equal, though, you would look at a situation like this and go, okay, buyers as they try to anticipate this rotation back higher again, Buyers would love to be buying on the way back up, similar to the S&P. Buyers would definitely looking to buy off that low. We may, because you can see there's just enough space down here, we may be able to get a breakout, get a scalp off that, off that high, and then start looking for that buy back up. I definitely think that is potential for tomorrow as well. We may be able to thread that needle there, get that 1, 2, 3 breakdown, and then get long as we go. So we definitely have that looking forward to us here. The sellers, of course, right? Bears would love to sell off the high of the range. Bears would also like to sell, again, if we can get a breakdown, we can look for shorts down there. But again, that may not last very long, right? We may end up getting that move lower, getting some scalps going, back to retest the low, and then it may rip right back up. So we definitely do want to be aware of that situation for tomorrow. All right, let's talk about game plan on this. A lot of this is going to be very similar to the S&P here. We're at a lot of good support levels here below this range. Again, if the market can start to push higher here, I really like that. I really like that 2-try trap. I like that one a lot, especially if I can incorporate, some sort of channel, off of those highs. Again, it's probably not required, but, if I can get it to kind of pop up, shallow pullback, higher high in price, that's a decent looking trap with the right signal, of course, right? Got to have the right signal candle to get that trigger. And again, I know a lot of you guys have taken that free trading course already, but if you haven't taken that free course yet, right, and I'll start bothering you about it, definitely do yourself a favor, take that free course. You'll learn the entries, when to take them, when to skip them, things like that. You'll make a lot more sense here with us on this video newsletter. If the market starts to pop and grind higher, again, stay patient. We're simply waiting for that channel now. Find that. Again, I like to look for traps, but sometimes all we get is a failure as bears come in and try to short, right, like this, right? It'll go up, they'll pull back, the bears will try, and they'll fail. So it's a lot like that setup right there. Little failure into pullback combo there. And then remember, we have a pretty good idea of where the market wants to go at that point, but you can fine-tune these targets. The first leg higher, right? That first leg and that third leg are almost always symmetrical, right? So you can see example right here, right? There's one leg, there's two legs, and there's three legs, right? This first leg, third leg are pretty symmetrical, right? Very, very common to get that. So that's where the buyers like to get to as their target. Now, again, as we go back to these highs here, same thing. 1, 2, trade the turn. Same idea we talked about before, right? Looking for that short, 2-try failure. And again, whichever the pattern setup we get off the high of that channel. I think it would also wouldn't surprise me here if we wound up at these highs. Again, let's say there's some good news that happens here overnight, right? Rather than having it try to go higher and fail, now it tries to go higher and pops. So if it starts to pop and hold above that breakout, now don't worry about that trend line up there. This is a bull breakout now. Mark up that high, mark up that low, drill down to our faster time frame. And remember, we always want that first test, right? The first test is the best test. I want that first test off the low of that channel, right? Second and third tests are no longer as reliable. We use channels really for the most part once, and then we look for another channel and use that once. Look for another channel and use that once, right? I don't really like to recycle my channels very much. I'm always looking for those first tests, right, as we go higher here. And then again, like on the S&P, there's quite a bit of space up top there, right? Now maybe it pops up and starts to really grind, right? Again, this is a little bit ridiculous, obviously, but let's say we slam higher here and then start to grind, right? Like that. Same idea. Mark up that high, mark up that low, right? Find those traps, those failures, those pullbacks. Just don't chase after it as it goes higher, all right? As we go lower, A lot of this is the same, right? As we go lower here, I would love to see us retest that low, trap in some of these bears. Give me one, give me two. Now, we talked about some variations. Okay, what would be some variations of this? So one of my favorite variations of a two-try failure is going to be a trap entry. So 1, 2 with a trap. We call these crown reversals in our trade room, right? So it's same idea. Bears are trying twice, right? Same idea. Bears try twice. We roll lower. Bears once. Bears twice. Back up. But I'll tell you right now, if you can get a trap entry off that, man, that's a great entry. One of the best. Then, remember, your job ain't done yet, right? We're not done yet. Now we've got the turn on our hands here now. The amount we go below the range is usually the amount we go above the range, right? So now, of course, we mark up that high, mark up that low, find those prior swings, and if we get lucky, get that little trap below the prior swing. That trap, by the way, is a must. Really, it's a must-take trade. It doesn't get much better than that trap off that off that low. We don't always get it. Sometimes all we do is sometimes there's no swing right there. Sometimes all you're doing is getting underneath the moving average, trapping in those bears with a failure pattern, and just simply buying right into their stops, right? And of course, we know where the market wants to go at that point. It wants to complete that pendulum swing. All right. Looking good there. So we got that covered on the buy side. What if the market was to go sideways down here? That's a good question. This could easily happen on the S&P. The S&P has a range there as well. What if we went sideways down here? What would we do? What we basically try to do is get underneath that trading range and apply that two-try failure to buy back up, right? Then same idea as we had on the S&P, right? As we go higher, we start watching for this thing to start to break free of that pendulum. We find those, right, those channels and grab it from there, right? So we're buying underneath the range, and then as we go higher here, we're watching to see if we can get some strength going through that pendulum swing, and then, of course, we can go out and we can hit it really hard off of that channel low. Right? You can be pretty aggressive off that channel low if you're getting this thing start grinding higher off that low. All right, as we go lower here, how do we trade this as we go lower? And again, this goes for the S&P as well. Let's say, for example, we take out that low. We see bears come in and short aggressively off the moving average. This is going to be one of those trades where you'll want to go like a hat. Well, again, this is very much depending on what the headlines are reading right now. If it's the end of the world out there, then obviously this is a much better trade. But if there's no new headlines, no fresh, pardon the word, pardon the term, but blood in the streets, then we probably this would be one of those half-size positions, right? Like I mentioned before, I think it is likely that we get at least a scalp there, right, or a first leg, third leg, right, off of that high. And again, I'm keeping this pretty simple right now. I'm not going to simply sell the top of that channel. We'll look for the traps, the failures, the pullbacks, the strength moves, right, coming off of it. And then from there, again, if we can get that move lower now we go right into some support here. And this is where we start thinking about 1, 2, buy into those stops, trade the turn, right? And then back up we go. 2-try failure into that first test is the best test. Another thing to keep in mind would be, as this market, if we go lower here, if it starts to really grind, right? Really grind and really grind. If it really grinds down like that, it's usually a sign there's going to be some sort of, range down here coming of some sorts. And so, again, when it starts to grind like that, we may not get that much more, right? But usually that first test is usually good for at least a retest of that low. Then we look for the 2 and trade the turn right from there. So it really all depends on kind of what that move down looks like. If all hell breaks loose, obviously, right? If we see a strong move down overnight, the bears come in, they take it and they whack it running lower, then obviously now we know what's going on, right? We'll be in kind of a free fall. We'll find those bigger channels here. We'll find those shorts off the high. And again, we know where the market wants to go at that point. It wants to make it all the way down to this big, 13,100. right? Which is not crazy to think of, again, because of the situation we're in right now. Now, obviously, this 1, 2, 3 breakout pattern will just be the beginning of this, of this sequence. So I'll have to kind of bear with me. We'll cover more of this tomorrow morning in the trade room. We'll look at what the next steps are going to be once we get down there. All right, but that's the general idea here of how I want to sell short here or buy it right back up. Like I said before, the bears have control of momentum, but the buyers really have a lot more options here right now unless we can get that big push down for those bears. All right, looking good. How about some oil? Everyone wants to know about oil right now. And really, oil's a pretty straightforward, kind of situation right now. You can see we're kind of breaking out and gapping up here at the Asian Open. As you can see, we ultimately have what's the most important thing right now? Well, we got 2 big legs up into a measured move. Okay, that next triple measured move, remember the first leg and the third leg, right? So we kind of have an idea of where that next objective might be. And again, keep in mind, a lot of this is very dependent on what happens here overnight, whether things continue to escalate, whether they calm down or not. So a lot of this is very, very difficult to anticipate for tomorrow in these, kind of extreme situations. The biggest thing right now is, and this is what we talked about last night in the newsletter, anytime we see a real strong move like this in one direction, we know the odds are pretty good they're going to retest that high. And that's exactly what's now happened, right? So buyers have kind of, completed their mission, if you will. Right? Mission accomplished at this point. Again, at this point, we'll see if it wants to keep going. So right now, we're kind of in a wait and see moment. Anytime we have a market that moves this much, right? Almost $12 in one day. Anytime we see a market move this much in one day, the following day is oftentimes a range, right? So anytime we see a real big move, anytime we go this far, this fast, it's almost like the market needs to, right, kind of catch its breath the following day. And so we oftentimes see a range up here. Now, this range may happen. They may kind of keep grinding this. We know that trends love threes. So they may keep on, we may see it kind of grind higher and then go into a range up here. That would be fine by me. We may also see it settle into a range right in here. It's again, it's a little bit tough to tell right now. So we definitely want to be prepared for a trading range. At the same time, really be ready for a range, be ready for it going higher here, obviously, and be ready for a deep pullback. If things start to level out a little bit, we may see some relief off of this high. But look at this big top back here at 100. You'd have to think that buyers would just love to get back down around that trend line, get back around this area as well. It's a little bit difficult right now to want to be a seller, until this thing is over. It's a little bit tough to want to be a bear right now until we can see some real good evidence of a momentum shift. And so we'll talk about that here as well. One thing you want to be ready for is a range tomorrow, right? When it comes to a range, what you want to remember is that when we have a bull market into a trading range, there are 2 basic things you want to look for. One, you want to find support levels below that trading range. Okay, that's the first thing. Then you want to wait for a pullback down into those support levels. We're not going to buy that pullback. What we're going to do is what I like to do is I'm not a big fan of just simply, trying to pick that bottom. So what I always do is I always wait for the bears to come in, let them try to get short, taking it lower, and hopefully they do, because then you know exactly where all their stops are, all their pain points are, and you can literally buy into those stop losses. Now remember, at this point now, we can trade the turn. So as we go higher now, we can now find that new channel, and we can obviously, again, drill down to our faster time frame and trade that turn with that trap, that failure, that pullback off that new channel. So again, it's a failure setup off support below the range, and then as we start to roll higher here, we grab that first test off the low of that channel. Now, where would our targets be on this? Remember the pendulum swing. So the amount we go below the range is the amount we go above the range. Okay, what I always do is always take some profit off at the high of the range and then try to leave a runner up to that pendulum swing. Okay, that also leads us now into a breakout. So that pendulum swing is a level of resistance. If we break through that level of resistance, this now becomes a breakout. And when we get a breakout, you know what, right? We start looking for another channel, buying off that channel, right? Basically, everything starts over again. New measured moves, new channels, everything from there. Okay, that's the way that I like to trade a range. We're buying off the low of the range. We're trading that turn, taking our profit off at the other side of the range, and then watching to see if we get that breakout through the pendulum swing on the opposite side. You know? So now, let's just say again, the range is right here. We look for that price to pull back, get down into an area of support. We'll talk about this tomorrow morning in the trade room. Find those bears for the failure, buy into those stops, find that new channel. First test is the best test, right? We break through the pendulum swing now. We break through that pendulum swing now. We pull back, we break through it. 1, 2, 3 move, right? 1, 2, 3 breakout pattern. Mark up that new high, drill down, and then where's our target from there? Remember, first leg, third leg. Remember, when you see a range on the chart, when you see a range on the chart, you know that everything resets once you get that breakout. So the breakout leg is the measuring leg. Don't worry about the middle leg. It's that third leg that'll measure it from there. Okay? Again, this may also set up right here too. We may end up right up here. Pulling back, failure, trade that turn, breakout, and keep on going. All right? And I would imagine at this point now, we're thinking about big round numbers. 110, 115, dare I say 120, right? As we go higher here. If we go, well, how would you sell this thing? What would you want to do to sell this market? Because it's so bullish, you want to use the 2-try, but you definitely want to trap on this bad boy. You definitely want the best possible short on this one right now. Like I said, not easy to justify being a seller in a market like this right now, right? Just because even if you get a beautiful pattern set up, another news headline can send this market really ripping higher. So, like always, we're at a great area for a short. We're at a measured move. We're at resistance after a really big up day. But again, you want to give those buyers the benefit of the doubt. Let them try a couple times. Another type of variation I like to use, draw a trend line off that low, bring that trend line up around that high, and you can find that short, little trap entry, little hidden channel entry, and you're good to go. Okay? If we end up pulling back here, really pulling back, which would be just a godsend for buyers, right? Buyers would love to get a really deep pullback here right now. Whenever we see a really deep pullback in a trending market, you want to use that 2-try. 1, 2, think about those stops. And then, boy, if we can get a nice deep pullback, that really sets things up here, doesn't it? For a nice trap low, right, off a new channel and a retest that high. 2-try failure, support level below the trading range, right, into that first test. It's a trap, it's a failure pattern, it's a pullback pattern off the low of that new channel. All right, at what point does that pullback become a reversal? Well, if we can get down to this area here, if the bears can muscle it up and get enough of a breakout going lower, it'll be difficult to argue with it, right? 1, 2, 3 breakdown. Now, what I'd be very careful with is if we go like this, right? 1, 2, 3 breakdown like that. I don't think that's going to be enough. Okay, that will be a situation where you'd want to draw that trend line, incorporate that 1, 2, and then try to use that trend line, right, for that 2-try failure. We call these 2-legged pullbacks, right? We talked about this last night, I believe, on the video last night. So if it does start to stair step its way down, use that trend line as your advantage. But again, if they do get into this, I would imagine a very, very important support level, get in there, hold that pullback and go, then we know, again, this leg here, pull back there, right? That leg will be symmetrical. You got to think, though, that 95 level, you got to think that's going to be a big objective for those bears, all right? As of right now, though, doesn't look likely. May also pop down and grind down. That would make sense if things really changed a lot overnight, right? Mark that low, mark that high, find that trap. Or, let's face it. We pull back and we blast going higher, right? We pull back, we blast going higher. 1, 2, 3 breakout, right? Heck with that measured move. Now we know that breakout leg is the measuring leg. So mark up that high, drill down, find that first test. If it's a trap, right? Pullback setup, whatever it is, that leg will nail down your next objective from there. All right, guys. So as you can see, there's no shortage of money to make on Wednesday. The big variable right now will be that testimony tomorrow at 10 o'clock Eastern time, and of course things happening right now, right in Ukraine. So we definitely looking forward to a great day tomorrow. Looking forward to seeing you guys tomorrow morning in our trade room as always. Don't forget, I'll put all of the membership links, everything you need to be right in the description of the YouTube video. I'll put all the free course links, everything you need there in the description. Don't be afraid to call the office, right? Don't be afraid to call the office if you have any questions along the way. We got live chat on the website as well. So definitely keep in touch. And you can always drop questions in the comments section as well. All right, guys. Thank you so much for sticking around tonight. Thanks for tuning in. Thanks for staying all the way to the end. Enjoy the State of the Union address tonight. Grab your popcorn. That should be a fun one to watch. And we'll see you guys tomorrow, 8 o'clock Eastern time in the Trade with Members. If not, you better come back and see us tomorrow night. We'll talk about how to make some money on Thursday's trading session. So definitely be back here if we don't see you tomorrow morning in the trade room. Guys, my name is Joseph. Thank you so much for tuning in. Now get out of here. Rest up. We'll see you guys tomorrow. Be well. Be nice to each other. And be here next time. Adios, amigos. Bye-bye for now.